Hey everyone, welcome back to your weekly market outlook. This is for the 3rd of November 2025. Let's get it started with a quick preview of what's going to come this week and also a review of last week. And obviously we have the interest rate decision from the US, and as expected, it was a 25 basis points cut. But the overall tone, again, it's more of a hawkish cut as December cut from JP is probably not going to be in the book. So yeah, everyone has to kind of recalibrate here and not expect a cut coming in December from the US. And obviously this is due to the US government shutdown, giving a lot of problems for the FOMC to kind of see what's really going on. They're really left out in the dark. Working on the CPI numbers, that's basically the only thing they can look at. Labor numbers, obviously, we don't have the labor numbers for October. September wasn't released in October, and October numbers is probably not going to be released this week either. So that's going to be a 2-month blank on the labor numbers. All right. Bank of Japan, interesting statement coming up from the Bank of Japan. They are they're unlikely to be hiking interest rates this year. Time is running out from the Bank of Japan, and obviously new prime minister, again, a little bit more dovish on the monetary stance there. But yeah, put a lot of pressure on the Japanese yen itself, and we are looking at an influx of carry trades coming back into the market as well. Bank of Canada also reduced interest rates by 25 basis points. We've got the ECB staying put at 2.15%. Unlikely to be changing anything in 2026. That's basically what Lagarde has been saying from last month, and that's likely going to be the case going into 2026. So nothing much coming up from the ECB side of things. All right. A couple of things. This week, we've got the RBA interest rate decision. Again, unchanged from the RBA, not expecting much from the RBA. They are likely just going to be on hold for a little bit here, especially with a lot of the global economy currently improving. It's, again, if they are going to be cutting interest rate, it might be too early for them to cut interest rates, considering that inflation could actually pick up as well as, global economy kind of recovers from whatever Trump has done in 2025. All right. Bank of England, again, unchanged, 4%. That's going to be expected on Thursday. Nothing much coming out from this one here. Bank of England, Bailey has basically said the same thing, pretty much in line with what Lagarde has been saying. It's not time for them to adjust their interest rate policy at this pace, at this rate. Again, pending a lot of that data's there. Again, non-farm payrolls, unemployment rate scheduled to be released this month. This is, again, tentative. I don't think we are actually going to be looking at this. Again, if we are going to be getting that release on Saturday in Australia, that will be past midnight. We still have to consider the number that was missing from last month. So this one here is going to be a little bit more of a unique position here. And again, we're not expecting that labor numbers to be released, as there hasn't been any progress as the US government shutdown goes into the second month. And obviously this is the longest US government shutdown, way beyond what we kind of predicted to be the fastest government shutdown. It turns out to be the longest. All right. Moving on to the technical side of things, the Aussie USD, as usual, a stable currency here, just floating around 65.5 here on the daily. You can see the range that we have here. It is shrinking a little bit, but more or less between that 2 cents, 65 to 67 cents. That's going to be the range for the Aussie here. Again, nothing interesting coming up from the Aussie here. The euro Obviously, we broke a bullish order block, which is now turned into a bearish order block. The positioning for this one here is below the Ichimoku cloud, and you can see that the trend is actually progressing a little bit lower here. Last Friday's close was actually lower than the October's low, and we opened the market here just slightly, just very, very slightly below 1.1550. So immediate support is going to be at 1.15 and followed by 1.1450. But ultimately, if we take a look at where the key levels are going to be, if you take a look at the chart there where the swing low is located, that's going to be at 1.14. So we're still expecting further pressure here on the euro. We do expect price to move lower towards that 1.1450 and ultimately towards that 1.14 before we see any significant support level here. Support 1 and support 2 on the weekly pivot kind of confirm the situation here. If we take a look at the positioning on the support 2, that's basically about 1.1425, very close to 1.14. Sterling barely hanging on here. Last week we didn't actually close below that low in May, which is exactly at about 1.3143, so about 1.3150 level there. We didn't close there, but we opened the market below that level here on Monday. And so for all intents and purposes, that order block itself, that floor, that low in May, that was broken. And it does open up further move to the downside, considering where the RSI is currently located. It is at about 30, and the stochastic is now dipping below 20. So things can actually speed up very, very quickly to push to the downside. One final support here, it's going to be at 1.3, below 1.3. There's actually not a lot of support here. When we say not a lot of support, that means it's very easy for it to cut below 1.29, 1.28. Ultimately, we're not going to be looking for support until the 1.27, 1.2750 area, which is a huge gap from where we are. We're talking about 300-400 pips here below the current price level here on the sterling. Lastly, we have the Dow Japanese yen. Again, nothing is going to be stopping the Dow Japanese yen, at least from the monetary policy point of view. Obviously, we have that cut from the FOMC, but it was a hawkish cut. And then we have the unchanged rate coming up from the Bank of Japan. But whatever Ueda was saying is that this is not the time for them to be hiking interest rate, and they might actually push that into 2026. And the political positioning in Japan and the US obviously does help out as well. So from fiscal and both fiscal and monetary policy, it's not really boding well for the Japanese yen. And again, if we take a look at the influx of carry traders coming back into the market from the volume analysis, this will just push higher here, and the level that we are eyeing for right now is going to be at 156. Current price level is about 154, so we're going to be looking at about 2 yens to the upside here before we find any resistance on the Japanese yen. Again, from the Ministry of Finance in Japan, they're not going to be intervening until we see that 156 level, so it's kind of in a no man's land with a lot of bullish driver here for the Dow Japanese yen. The current trajectory remains to the upside. The RSI is above 60. That indicates a very strong uptrend here, and the stochastics well above 80 here. So there's actually a lot of room for this one to push higher. And if you take a look at where the order block is currently located, the bearish order block, it's pretty much at about 156 area there. The R2, if we look at the weekly resistance 2, that's going to be at about 156.25. So yeah, that opens up the way towards 156. So I think this is going to be one directional in terms of market movement this week, at least from the technical perspective. So good luck with your trades, and I'll see you soon.